So 600 odd financial businesses, about 40,000 people working in the precinct. Of the major 29 globally systemically important banks, 27 of them are in the DIFC, including the big 4 Chinese banks. Most of the world's big institutions are there, and typically they run the Middle East from the DIFC, or that could be the Middle East and North Africa, or the Middle East and South Asia. So it's a true international hub. Hong Kong has always been a leading financial centre, and one of the reasons for that is it's always had very, very good regulation. At the HKMA, at the SFC, now they have the Insurance Authority separately. Other regulators have always looked to the Hong Kong regulators as an example. So I think Hong Kong has always had the right balance between wanting to be entrepreneurial, allow risks to be taken, and yet have good regulation in place.
We know that DFSA has shown strong commitment to accelerating the growth of sustainable capital markets by removing all regulatory fees on ESG listings on Nasdaq Dubai throughout this year. So from your point of view, how will this initiative help enhance the market interest in listing there?
Well, there's a couple of things that it does. I mean, it sends a strong signal that we want to attract that type of business into the DIFC and onto Nasdaq Dubai. So there's the signaling element of it. There's the fact that it will save some money for those entities that want to list. It's the regulatory fees are not by far the biggest part of their expenditure, but it still sends a good signal. So if there's ambition in the real economy to transition to a lower carbon outputs, then the financial sector has to facilitate that. So we as regulators, in helping the financial markets facilitate that, we would do what we can to attract the business, and lowering our fees as part of that.
So how is the market response to this new initiative so far?
Well, so far so good. Nasdaq Dubai, the exchange, and the DIFC, our financial centre, is the largest venue globally for ESG Sukuk. Green Sukuk listings, and already we've had major financial institutions who've recognised that they can save some fees and have already put in some applications. So the response has been good so far.
Yeah, that's very good to hear that. As you mentioned, as we know that Hong Kong, DFSA has signed a partnership to promote fintech cooperation back in 2017, and another partnership to accelerate sustainable finance cooperation last year. So we're very curious to know what are the progress have been achieved so far. Can you share a bit more on that?
We've, for a long time, had good cooperative arrangements with Hong Kong. Hong Kong and Dubai are both cities that promote themselves as international financial centres. As you said, we've signed some fintech agreements because we both realise that the future of finance, a lot of that is going to revolve around the new technologies, fintech type products, digital assets, etc. So it's really important that regulators learn from each other and cooperate on these things. So that's why we've signed those agreements. We have a very tangible outcome that will happen this year. Together with HKMA, we will arrange a climate finance conference. The first one will be in Hong Kong, and then the second one next year will be in Dubai. And we, the DFSA and the HKMA, will jointly do these conferences each year.
Yeah, that's very exciting. Yeah, for the industry to be gathered on this platform.
Yes, you can't transition to a low carbon economy without financing it in some way. So capital markets have an important role to play. We as a regulator of a capital market want to do what we can to make sure that that's done responsibly. And this is one of the things that we can do to help with that.
Yeah, definitely. As you mentioned, Nasdaq, your exchange is the biggest, the green finance Sukuk market already in the world. So do you have any experience to share that how to mobilize this capital into the green finance or green investment?
Well, two aspects of that. There's the general thing that you do to make sure that you have good market integrity, make sure that you have good compliance standards, and yet are allowing innovation and attracting listings. So that's there for all types of listings. Then in respect of green or Sukuk listings, we made sure that quite early in the process we put out our guide to green bonds, so the market knew what they had to do to satisfy us about that. We also put out quite early an overall guide to ESG, so that again issuers would know what their obligations would be and how we would look at it. I mean, these issues are specifically in respect of ESG and green, but in structure they're not all that different from the normal capital market instruments. One of the things that's interesting though is, we still view ourselves, we're a financial regulator, we're a markets regulator, we're not an environmental regulator. It's government's job to set public policy in that area. We'll guard against greenwashing. You
were a special advisor to Hong Kong SFC back in 2005. So what kind of experience or Hong Kong or expertise Hong Kong has can share with other parts of the world or in Middle East nations?
Yes, I was fortunate to work at the SFC quite some time ago now. But Hong Kong has always been a leading financial centre, and one of the reasons for that is it's always had very, very good regulation. At the HKMA, at the SFC, now they have the Insurance Authority separately. Other regulators have always looked to the Hong Kong regulators as an example. So I think Hong Kong has always had the right balance between wanting to be entrepreneurial, allow risks to be taken, and yet have good regulation in place as a core. Some places I think have been really good at regulation, but have actually not allowed enough innovation, not allowed enough risk taking. Hong Kong didn't make that mistake, and we're trying to get that right balance as well.
It's not very easy to strike the balance between the two, right?
As a regulator, you have to say, of course, we understand that you take risk. You have to decide where you set your risk tolerance. Investors, though, also have to understand that this is not a zero risk market. That's the same in Hong Kong, it's the same in Dubai, in the DIFC. We make it clear to investors that we're not a zero risk regulator. Firms have to be allowed to take that risk. But we want to ensure that they've got proper governance, that they have proper compliance arrangements in place, that they understand the regulatory regime and have got the resources in there to comply, and that they have the resources to understand and manage the risks that they face. Those things are crucial.
That's quite thought-provoking, I think. It's quite valuable point to the question.
One of the things that happens is markets are often saying that regulators are too tough and that we should get out of the way and let them take more risk. But then as soon as there's a major market problem, a major case of misconduct or something that falls over, people tend to say, where was the regulator? How did they allow this to happen? So you've got to strike a balance.
As we know, the Hong Kong government is very active and keen to promote the city as a global virtual assets hub. And we are just wondering what kind of approach DFSA has adopted to promote this sector so far.
So I would emphasize again that the DFSA, we regulate the Dubai International Financial Centre. So that's a financial centre in the free zone in Dubai. It's the largest international financial centre in the Middle East. It's the main finance hub for the Middle East. There are more than 600 financial businesses operating in the DIFC. There are about 40,000 people working in the precinct because we're a physical precinct as well as a legal jurisdiction. When we were created, it was with a view to attracting international business. So we're a common law jurisdiction. So the laws of Dubai and the laws of the UAE do not apply inside the DIFC. We have our own courts, our own regulator, but we only regulate the DIFC. So 600 odd financial businesses, about 40,000 people working in the precinct. Of the major 29 globally systemically important banks, 27 of them are in the DIFC, including the big 4 Chinese banks. Most of the world's big institutions are there, and typically they run the Middle East from the DIFC, or that could be the Middle East and North Africa, or the Middle East and South Asia. So it's a true international hub. So that's what we regulate. For the licenses that we issue in respect of digital assets and crypto, we started with a fairly conservative regime for crypto, and we're now consulting on whether we relax that a little bit. But I'm comfortable that we started reasonably conservatively.
I think you just released a consultation paper.
Yes. And so as a result of that, we might release, or relax, I should say, some of the settings, but our risk appetite was relatively low to begin with, and it's better to start low and then relax it as we go along, I think.
So how do you see the collaboration between DFSA and the Hong Kong regulators in this area?
Quite similar, and I think they'll be even more similar as time goes on, because one of the things that's been different about crypto was that there were no international standards out there. If you're regulating banking or insurance or securities, there are international standards that have developed over the years. Of course, there are none of those for crypto. They're underway. But those of us who have chosen to regulate this, such as Hong Kong, such as us, we're ahead of the standards at the moment.
So where do you see Hong Kong is standing compared with other regulators?
What I think will happen is that because the standards are developing now, and then as regulators, I know that Hong Kong and we and Singapore and good regulators will then adopt the standards. So you'll get greater consistency and greater certainty in these markets than there has been in the past.
Yes, certainty and clarity are very critical for business operators, right?
We need to get to more standardized or consistent definitions. The inputs and the written words don't need to be the same, but the outcomes should be consistent. But we are working on that. And the global standard setting bodies, IOSCO for securities regulation.
So no regulatory arbitrage.
That's what we want to guard against. That's right.
Yeah. Okay, my last question is about the Chinese investors. They have been very active in Middle East or UAE market in recent years. So what are the driving forces behind this increase in interest from Chinese investors?
So I think that they see the Middle East as a place that's still growing and growing quite fast. So there's the market opportunities. I think there's also the fact that they, especially in China and Hong Kong, they understand Dubai quite well. And there are those close relationships. But China is Dubai's #1 trading partner, so there are very strong trade relationships as well. So I think it's natural for you to invest more in places that you understand. So there's the fact that the markets talk to each other and understand each other. So I think that's driving it as well. And then the fact that as regulators, we share information. So, I meet with and talk to the CSRC and with the banking regulators, and the same in Hong Kong. The fact that the regulators will speak to each other gives comfort, I think, to the financial institutions to come, and therefore if the financial institutions are there, the investment opportunity is there. The 4 big Chinese banks are in the DIFC, and there will be further other Chinese companies coming as well.
Oh, that's great. So what are the benefits that this influx of Chinese investment will bring to both nations?
Well, diversification, I think, for the Chinese investor, because they're able to invest in another region. And we have all of those ESG Sukuk. I think about 20% of the listings are Chinese institutions. Hong Kong did a sovereign issue in the DIFC. Bank of China has done an issue. ICBC has done a major issue. And so there's very strong interest there.
So one more question, if I may add, is about how do you see Hong Kong? Because there are a lot of questions or skepticism narratives about Hong Kong's status as a global financial center. You've been working or living here for a long time, and so now you are out away from Hong Kong, so you have maybe different perspectives. So can you share with us what's your view?
Well, I was in Hong Kong about 6 weeks ago. I'm here now. I'll be coming back shortly for the Rugby Sevens, because I'd love to come for the Rugby Sevens. So personally, I love to come to Hong Kong. As far as the business opportunities go, I mean, this Asian Financial Forum shows you that Hong Kong has the ability to attract people from everywhere. I mean, this is a mega event and very, very good people here. So Hong Kong can still attract that sort of interest. It's very well regulated. So if it's well regulated, if there's the right approach to risk, it'll continue to grow as an international financial center for sure.
So from the Middle East perspective, how do you view the role of Hong Kong?
It's the major financial center in Asia. That's how I have always seen it and continue to see it. And I think that's how my peers in the Middle East would view it. I know it brands itself as Asia's main city, but it is the place that attracts most international investment, and I think that would continue.